even kids, even under 18 are gambling with crypto. They're buying Bitcoin, they're trading, very speculative. Then they're getting on these, they're not supposed to be on these gambling apps, but they're doing it anyway. And then you have apps in your pocket like Robinhood and other trading apps. And so it starts to become gamified. Well, the problem with gambling with your money is you tend to lose it. And it's very expensive. So we have a whole generation, 2 generations, millennials and Gen Z, that don't know what long-term investing is.
All right, guys, today we got a treat for you guys. We got someone in the building who's managing $13 billion assets under management, been doing big things in the capital markets for decades now. I got my man, Mark Matson, in the building. What's up, Mark?
Hey, it's good to be with you.
Yeah, man. Appreciate you coming on. And you got your book here, Experiencing the American Dream, which has been a bestseller, 6-time national bestseller
Six
now.
times, yeah.
Doing big things, living out in Scottsdale. And man, you show me photos of this new property that you're developing in Scottsdale. You got a football field in your backyard. My man.
Yeah,
What made you come up with that?
Yeah, well, we got 2 kids
Mm-hmm.
that live with us now. We got 8 total.
Yeah.
Not even Catholic, just prolific. And
Damn, 8 kids.
yeah,
I love it.
and so the 2 little guys are now, we have got them all the way up in their 30s, but these guys are 13 and 10. They love baseball, football, basketball. So we put the football in the backyard.
Oh man, that's so badass.
Fishing, going to be a fishing lake, and
That's gonna be fun being a kid growing up in your household.
yeah,
Man, I
looking
love
forward
it. I love it. So anyway, so much game to cover here in the capital space, in the money space. There's a lot of talking points that you cover in this book that are really, really good, and I really want to debunk some of these points. So let's go ahead and jump into it. You say in your book, most Americans don't have a money problem; they have a meaning problem. What do you mean by that?
Yeah. Well, when I was first starting out as a financial planner, my dad was was a financial planner, and so I wanted to grow up and be like him. And I studied finance and accounting at Miami University and got 2 degrees. And then when I went to work for him, part of my job was to help people grow their portfolio. And I had 2 clients, and one client, my biggest client, had 5 million with me. Another client had about $500,000. And based on the idea of make clients money, make them more secure, make them feel happy, that completely got blown apart very early in my career. And I discovered that the client with the 5 million was very unhappy, totally afraid of the market, totally afraid of the government, totally afraid what's going to happen in the world. She was miserable. And the client with only $500,000, she was very happy and outgoing and had great relationships, gave money to charity. So it appeared that there was something about money that cannot make you happy. And I think so many people spend so many years of their life just running after the money, and they're shocked when they get it and discover that, wait, this 100 million, 200 million, 300 million that I got, doesn't make me happy. And there is nothing about the meaning of it. You have to ask yourself, what is it that is more important to you than money itself? And you have to find a purpose for your life and a purpose for your money, and then you can start to invest your money for that purpose. And if you try to do it the other way around, you end up maybe making some money, but perhaps being really miserable.
Yeah, that's really good. I always say happiness stems from growth and progress. So the more we grow, the more we progress, the happier we are, the more fulfilled we are. People talk about, making a bunch of money and then retiring. I'm like, dude, people that are retired, they get bored real quick. You talk to business owners that build a business for 10, 15 years and then have a big exit. Like they go through a lot of mental issues and roadblocks. It's like an athlete, a pro athlete retiring after a 15-year career. It's like, dude, they go through a lot of stuff psychologically because it's like that's all they knew. And then now it's like, what's left in the tank,
People ask me about retirement, and I usually say, don't do it. The happiest people I know in their 60s, 70s, even 80s are the people that never stopped. They might have changed tracks a little bit. Maybe they're consultants or they're advisors. They're running a second business after they sold their first one. But these are people that stay motivated. They have passion. They have energy. They care about other people. They're focused on being of service. And I think a lot of that goes away when you fully retire. How much golf can you play?
Yeah, absolutely. And the cool thing about this game, unlike a lot of these professional athletes I've had on, like I've had on Golden Tate, he's NFL Pro Bowler, Super Bowl champ with the Seattle Seahawks, and he retired at like 32 years old. So his shelf life as a pro athlete was relatively quick. But the cool thing about this game, we talk business, we talk investing, we talk money. This game that you and I are playing, we can play into our 70s, 80s, even 90s. There's a much longer shelf life, which is kind of exciting.
Yeah, for sure. I mean, I opened my company when I was 27, and I'm 62 now.
Damn. And you're 62 and just getting warmed up, man.
That's right.
I've had Grant Cardone on a few times, and the guy's almost 68 years old. And you talk to him, I'm like, dude, this guy's just getting warmed up. He's got a lot of juice left in the tank. But on the flip side, you might talk to someone that's 60 and already retired, and mentally, and the way they talk and their energy, it's like they already peaked and they're on the downhill now. So there's two ways to look at it, but I think it's all in the mindset.
I think it's all mindset. And I discovered that I was born in the hills of West Virginia. And so my dad worked in the hollers. My grandpa worked in the coal mines and the chemical factories. And we would go back in the summers and visit. Now, we weren't rich. We had maybe like a 1,200 square foot house when I was little. And but we'd get in the station wagon. We drove back to the hills of West Virginia. There was so much poverty. I mean, West Virginia was beautiful, but so much destitute poverty. And my grandpa never got out of the hollers. The American dream saved my dad, but it couldn't save him because he lived a life where he believed he was a victim. He believed he was entitled. He believed that people that had money were evil. He believed that the only way you could get money was to steal it from other people. And my dad, on the other hand, loved America, loved capitalism, loved free markets. He had a view that in this country, the greatest country that's ever existed on the face of the planet,
The greatest.
that you could create anything that you were willing to do. And he'd always tell me when I was young, Mark, don't ask, no one owes you shit. Nobody owes you anything in life. You have to go out and create value for other people. And when you create value for other people, then you'll get something in return. But nobody owes you anything. So you have two different mindsets. And I adopted the one of my father and my grandpa, God bless his soul. But he never got out of that mindset.
Yeah. I always say like the scarcity mindset, and then some people have the abundance mindset. My parents grew up in the 40s, and they came from a very like scarcity mindset. It was like save, work hard, save everything. Don't take any risk. And I think that model could work for some people back then, but that model today with inflation and the way that the government just prints money, it's not a recipe for success. That's why I tell people now, I'm like, be careful with your parents' advice, because it might have worked 40, 50, 60 years ago, but in today's age, it's terrible advice.
Well, it's my dad taught me, and we grew up in Cincinnati after we moved out of the hills of West Virginia, and it would snow right now. It's in February now, so it's terrible right there. But when it would snow, I'd get off school, and all the rest of the kids would go grab their sleds and go sleigh riding, and my dad would be standing in there at the door with the snow shovel, and he'd be like, "Where are you going? You're going to get the snow shovel, do our yard, then go to the neighbor's house, and then go to the other neighbor's house." And I'm like, "They're going to pay me, right?" He's like, "Well, they may pay you, they may not, but I'm teaching you the value of hard work, because work is a value all of its own, not necessarily just what you get out of it." So it's a good value. But the problem with that now is that hard work alone, with AI and other technologies that are coming up, quantum computing, robotics, it's going to be harder and harder to make money just with the hard work. You're going to have to be creative, inspirational, move people to anything that can be replaced by a computer, be replaced with technology in the future is going to be. So how do you continue to add value, not just work hard, but how do you add value that you can't get from a computer? I mean, we were getting ready for the podcast, right? And pulling up ChatGPT, what would be good questions? And within 3 seconds, we get an answer, right?
Mm-hmm. Yeah, it's quick. I mean, you can
Just
do a
2
lot
years
of,
ago, we couldn't do that.
No, it's crazy to think about. By the way, you said Cincinnati, you grew up. My first ever apartment building that I ever bought, my first real estate investment was in Norwood. It was an 11-unit apartment building in Norwood for $350,000, $31,000 a door. that was my first ever deal, and I just sold it last year for like 720K.
Nice.
But when I first got in the game, I was thinking like, I was thinking, hey, let's go into these Midwest markets. Cincinnati is like, okay, they got, good population growth, steady employment growth, and then you can buy a product for very cheap out there. You can make a lot of mistakes and then still make a little bit of decent money, but it's never going to get you rich, right?
Right.
And so, anyways, my progression as a real estate investor has shifted, and so now we buy in these sexier markets. So I sold that asset last year, but anyways, just wanted to drop that with you. Norwood, 5146 Carthage Avenue.
You still got
Yeah,
it.
yeah. And then the zip code was like 54212, something like that.
Trump started in Cincinnati.
Really?
His
I
very,
didn't know that.
yeah, I read his life story. That was his first property. He had one in Cincinnati too.
Damn, that's
Yeah.
crazy. What part of the Cincinnati you grew up in?
I grew up in Green Hills, a little
Green
teeny
Hills.
suburb about
Okay.
half hour outside of downtown Cincinnati.
Okay. It's nice there, man. Downtown Cincy's kind of nice. You got the Ohio River, you got the hills, they're all green. It's not flat like most of these Midwest
Oh
markets. They
no,
go to like
it's very
you
hilly.
go to like Louisville and Indianapolis. There's nothing to look at. It's all flat. But Cincinnati, you got the water, you got the water in the Ohio River, you got the hills, the green, it's lush. I think it's kind of nice. If I was living in the Midwest, I'd probably pick Cincinnati. And then I bought another apartment deal, which I actually recently sold, but this is early on. That same broker who sold me that first 11 unit deal, he sold me a 8 unit deal on the south side of the Ohio River, 8 units in Covington.
In Covington.
And what happened was the dude was an uncle, and he had owned the property for like 30 years. He gifted it to his nephew, 8 units for like $130,000. So this nephew didn't want anything to do with the property. He just wanted to make a quick buck. So he sold it. And so JD comes to me. Shout out to JD Schmergy, by the way. He's the broker that sold me both those deals. And him and his wife invest with me now. But anyways, he comes to me. He goes, hey, I got an 8 unit deal for you off market for 207. You want to buy it? And I was like, sure. And so bought it. I'm like, it's so freaking cheap out there. I'm like, you think about the cost out there. I mean, 11 units for 700 or for 350. A 1 bedroom condo, like right where this building that we're in right now, a 1 bedroom condo is going to sell for like 700.
Yeah, I mean San Diego. I'm in Paradise Valley, and I have a house in Montecito, and that's pricey.
Yeah. So
Super pricey.
So anyways, got me in the game there. But anyways, okay, so you say in the book, why do Americans make more money than ever but feel poorer than ever? What do you mean by that?
The common, if you don't have a purpose for your life and your money that's bigger than money, then no amount of money is ever enough. So you're constantly just trying to make it. And then we live in a culture where gambling and speculating is becoming the norm. And there's obviously DraftKings and all the gambling apps you can
Yeah.
now have in your pocket. But even kids, even under 18, are gambling with crypto. They're buying Bitcoin. They're trading, very speculative. Then they're getting on these. They're not supposed to be on these gambling apps, but they're doing it anyway. And then you have apps in your pocket like Robinhood and other trading apps. And so it starts to become gamified. Well, the problem with gambling with your money is you tend to lose it, and it's very expensive. So we have a whole generation, 2 generations, millennials and Gen Z, that don't know what long-term investing is, and it costs more than ever. People when we were doing the massive inflation under Biden, people were like, "Is this transitory?" And I would go on TV and I'd be like, "There is no transitory inflation. It always comes and it never goes back." So it might slow down, the progression might slow down, but it ain't going backwards. We're not going to have deflation. So you're going to have to keep making more money. So I think people feel stressed, they feel anxiety. And most people, the main problem is most people think you have to predict the future to be a successful investor. So they feel like they have to know what's going to happen with the stock market next, which are going to be the best stocks. So they feel like they need an economic prediction, political prediction, war prediction, and then based on those predictions, they're going to change the mix of their portfolio so that they're going to maximize their wealth. But all the academic research says that all the knowable and predictable information is already in the price. So that just turns into speculating and gambling with your money. And when people are doing that, I think they feel desperate.
What are your thoughts on Bitcoin?
I think it's terrible. I think it's one
Mm.
of the worst things you can possibly do.
I got to be honest with you. I have these Bitcoin guys and crypto guys on my podcast, and they've explained to me. They'll sit here and explain to me how it works, but I still don't understand how it works. And I always say, if you don't understand how it works, don't invest into it. But a lot of these Bitcoin guys are quiet now because it was at 120K, and in 6 months it went from 120 to 60K. These guys are quiet now. They're not talking about the Bitcoin game. So it'd be interesting to see kind of how that plays out, because these guys are all on here telling me it's going to a million. It's going to a million. Even Grant Cardone has structured some
You messed
funds
it.
within Cardone Capital, where they are buying apartment buildings, and then instead of cash flow being distributed to investors, the cash flow is going to buying Bitcoin, which they will hold. And theoretically, yeah, if Bitcoin goes to a million, it's going to juice the returns. But what happens if Bitcoin goes to zero?
Well, I'm sure you didn't hear these from the Bitcoin guys, but just think
I
about.
still don't know what
Yeah,
it is. I don't know
well,
how it
that's
works.
because nobody knows what it is.
Mm.
So because there's nothing.
Yeah, you're buying a
It's
symbol.
like the ether. So check it out. When you buy a stock, you own a piece of a company. They have assets, they have employees, they have factories, they have products, they have intellectual property. You own something. When you buy a bond, whether it's a corporate or government bond, you own a guarantee against the government, which can tax you to pay it back, or you own a guarantee from a company which has real assets. So in both of those cases, you actually own a real asset. When you buy cryptocurrencies, number one, it's not a currency. You can't have a currency that could lose 50% of its value overnight. So it's not a currency. It's not a coin. They say there's your tokens. It's not a coin. It doesn't exist. And it's not backed up by anything. There are no assets. The way I say it is there's no there, which means that what's the right price? The right price is zero. The only way you make money on it is, like P.T. Barnum said, there's a sucker born every minute. You only make money if there's someone more, well, I just say stupid. It is stupid. That's willing to pay money for something that's worthless than what you paid for it. And so, I heard Grant, had to lose his, his airplane over it. I don't know. I don't know what people are thinking. It's absolutely absurd. There's been so many crashes throughout history. And if you're astute, you see all kinds of crashes. Even Isaac Newton lost $3 million in today's value on the South Sea bubble. So just because you're a smart person doesn't mean that you're not going to get caught up in bubbles.
Yeah, and even like real estate, for example, it's like you can look it, you can touch it, you can feel it. It's tangible. It's backed by a real asset where people stay at these buildings. They come into these buildings, like this building that we're recording in right now. 140-year-old building. You can see the original brick and the arches. And guess what? 140 years later, it's still printing money.
It's a
and
great
bringing in
building.
cash flow. And so it's a good lesson versus, all these different alternative investments that people talk about. The NFTs were a big thing 3 years ago, and guess what? Everyone lost their ass on these NFTs, and no one's talking about them anymore.
Remember the Bored Ape that Justin Bieber bought? He paid $1.23 million for it.
Yeah.
And it's like worth $12,000 now.
Yeah. And so the takeaway is, if you're listening to this, if you don't understand how it works, don't invest into it.
Yeah.
It's as simple as that. So you also say the education system teaches people how to earn, but not how to build freedom. Break that down.
Yeah. Well, freedom, most people think that, and I think this is why the American dream gets a bad rap sometimes, is a lot of people think the American dream is about money and materialism, a big house, big cars, and I'm not against any of that stuff, but that's not the American dream. The American dream is based on freedom of expression, freedom of private property, freedom of the press, freedom of religion, freedom. You live in a world in America where you can define your purpose in being, your happiness, right from the Declaration of Independence, your view of happiness and what that really means. And there are a lot of countries in the world that do not have that. So you get to decide what is fulfilling to you. You get to decide what's meaningful for you. And a lot of people get just sucked up into more speculating and gambling, and they don't fully use their freedoms to express themselves. So if they would focus more on the freedoms that they have and creating value for other people instead of just acquiring more materialistic possessions, they're going to have a much more fulfilling life, because that is the beauty of the American dream. You in Russia, you can't own private property. In Iran, you don't get to own private property. In Cuba, that's communism. That's what it is. And we live under capitalism, and you have the ability to buy a building like this if you work hard enough. So that expression is beautiful. And the relationships that you build and the people in your family, and the people in your life, that's what the American dream is.
That's really good.
Not just materialism.
And this is the best time ever to be alive, I believe. I mean, we got the access to information has never been easier because of podcasts like this, YouTube, social media. You can access so much good information for free. And think about 30 years ago, 40 years ago, 50 years ago, like access to information was very challenging. And so, doing new business ventures or getting into new investments, it was considered risky because you didn't really know what you were doing. But now, because the access to information is so much easier, anyone can like literally get into a new industry. And if they really apply themselves, you can learn a lot in just 3 months, 6 months time, and really change your entire landscape of your life in a short period of time because of the access to information today.
Yeah, absolutely, no doubt. I mean, when I opened my company, it was 1991. I had an overhead projector. I had a Rolodex. I bet some people don't even know what the Rolodex
What is that?
is. A Rolodex.
Oh, a Rolodex. Got it. Yeah.
The
And
little thing
you put your business cards on there?
Flip over you want to call somebody, you don't have you got a phone on your desk, and you got a little Rolodex that has the different phone numbers.
What was the point of the Rolodex, though?
It's how you organize. It was just like your contact list on your phone.
Oh, so it would be in alphabetical order.
Yeah. Well, you can put it in order, any order you want to, but yeah. And you would flip through it like this.
So it'd be like, okay, Mark Matson, let me find the M, and then flip it. And then it would have your phone number.
Yeah.
Not even an email address, because email wasn't even a
No,
thing yet.
there was no email.
Damn.
There was no internet. There was no email. There was floppy disks.
And it'd be your home phone, right? You're just dialing the home phone?
Oh, yeah. There were no portable phones.
Damn.
There was nothing. Overhead projector, yellow pad, $30,000 in debt. And that's how I started it, right?
Damn, that's crazy. How did you form like an LLC back then? Because today it's so easy, but like, how do you do it back then?
You gotta hire an attorney, and they gotta, draw everything up.
Yeah.
And
We form LLCs now, like literally in a matter of hours.
oh yeah.
In any state. And it's like, boom, here we go. And then within an hour, we're getting the EIN number. It's formed. But back then, I'm like, fuck. I mean, even how do you set up a date back then? You want to go on a date with a lady? How'd you set that?
Oh yeah, you got to go to your house and call somebody.
Damn, that's crazy, man. That's crazy. Is that how you met your wife?
No, well, I met my wife. We were both married before, and then we were both single, and I met her through a friend. We've been married now. We've been together for over 20 years.
Damn. All 8 kids with her?
No, she had 3 and I had 3.
Okay.
And then we both agreed when we got married, no new kids and no dogs. And
Yeah.
now we have 2 kids and 2 dogs.
Oh, man, nice. I like it.
She looked at me one day after we've been married for a couple of years, and she said, "I love you so much. I can't imagine not having kids with you." And I said, "Well, I can." And after you have 6 of them, I mean, that's a lot already to take care of. And but no, she won me over, and then we had Gage, and then she said, "Oh no, he needs a brother to play with." And I'm like,
go. And now you got 8 kids.
Yeah.
I love it. Okay, so this next one's really interesting. Is Wall Street designed to confuse the average American?
"Oh yes." Oh
Right.
yeah.
Why do you say that?
Because I came from it. I came from a wirehouse. I call them the Wall Street bullies.
Okay.
And what they do is they lie.
Mm.
And there's 3 main lies they tell you. The first lie is that stock picking works. That if you trust them, they'll pick all the best stocks out and you'll beat the market. The second one is that market timing works. That if you trust them, then they'll tell you when to get in and out of the market, so you can get in right before prices go up and get out before they go down. And then the last one is that some great, brilliant money manager that you would hire will consistently and predictably beat the market. So that's why you should use them. And after only being in the business for 4 years, I knew that was a lie, because we would show these people 20-year track records of these mutual funds, and we put our clients in it, and then they would be losing to the market by 3, 4, 5% a year. Our broker dealer would be like, "Oh, sell them this stock, sell them that stock, sell them that stock," and we would do that, and then these stocks would get killed, or they'd say, "Okay, it's time to get out of the market now because we think the economy is going to be bad, and we predict this," and then the market goes up 40%. So it was really obviously that was just a bunch of BS. And then I went but I didn't know why. I mean, why can't really smart people consistently pick out the best stocks? Shouldn't they be able to do that? But then I went to a debate in San Francisco of an academic I never heard of before. His name was Rex Sinkfeld, but from the University of Chicago. And he explained, you believe in capitalism, right?
Mm-hmm. Yeah, of course.
So in capitalism, prices are set by supply and demand.
Mm-hmm. Free market.
Free markets. And so all of the supply and demand goes into selling, let's say, whatever stock, ABC stock. Okay. So you've got all the participants in the market, and all the knowable and predictable information, especially in stocks because they're so liquid, are traded every single second of every single day. And so all the knowable and predictable information is already in the price. Therefore, only unknowable and random information will change the price moving forward. So the people that beat the market in the past, let's say the S&P does 10%, somebody made 13%. So people would assume, well, that extra 3% is because they're so brilliant. No, if I have a room full of 1,000 people flipping coins, there's going to be a bunch of people that randomly flip coins, heads more than the other people. It's like the orangutans. And so all these mutual fund companies like Fidelity and Vanguard and American funds, and all, they know, Rich, they know.
Yeah.
They know they're lying, and they don't care. So on average, 90% of all these brilliant so-called managers underperform the market.
They just don't talk about those.
They don't ever talk about those. 10% get lucky, and they don't repeat. So here's the trick. Own the market. Don't try to bet it. So like for S&P 500 stocks, historically, they've been about 10%. Your money doubles in about 7.2 years. My small stocks have averaged about 12%. If most people average 12% on their money, they're going to be just fine. Small value stocks, 14%. Last year, international, the problem with stock picking and market timing is you miss the markets. Last year, small international value stocks did 52%. And hardly anybody owns them because they're betting on NVIDIA and Apple and Amazon and, all the big, the Mag 7. So the bottom line is Wall Street knows. They just got to keep you buying and selling. And that's what's going to make them money. They know they don't know. And I meet financial advisors like this all the time that are lying to their clients. They know they don't know, but they won't tell them the truth. It's disgusting.
That's powerful. That's powerful. So do you believe in like dollar cost averaging?
Dollar cost averaging is okay if you're starting off without any money. So let's say that you're a new investor, you got $1,000 a month and you're dollar cost averaging. That's great. But let's say that you have $1 million. Dollar cost averaging isn't great because, like all likelihood, 3 out of every 4 years, the market's up on average 20%. Average. 1 in 4 years, the market is down. I'm talking about U.S. large stocks, and it's down about 11%. So the odds are, instead of dollar cost averaging, if I have $1 million, it's better to be in the market, odds are, long term, and then instead of just slowly putting it in. The other thing is that if you're afraid of losing, and markets crash, I mean, no doubt, 2008, 2009, S&P was down 50%. If you can't take that kind of risk, then you have to diversify by putting, let's say, half in equities, half in high-quality short-term fixed income, so that if the market does crash, then I can rebalance my portfolio, take the fixed income, buy the equities while they're down, and when they come running way back up, then I rebalance back the other way. So the best way to handle risk if you are afraid of 100% equities is to diversify, not dollar cost average.
Yeah, that's really good. By the way, the 2008 financial crash, what was that like for you, with all the assets under management? Because I mean, that was probably the biggest crash that we've ever seen in history, as far as like just off the cliff. And it was a lot of the real estate loans the stated income loans that really created all that. But the stock market really crashed quick, like 50% loss in a matter of a month. So what was that like with clients, and what was the message to your team and to your clients then?
Yeah. So that was tough times. That was really tough times. We went from 2.4 billion to about 1.4 billion. So I mean, that market
So almost
crash
50%
was
haircut.
serious.
Damn. And how
Um,
long of a period was that? Ballpark.
about a year,
A year. Damn.
and it was constant communication. One of the things I tell investors is we're not just managing the portfolio, we're managing your mindset, because your instincts are to run away when things get painful. Your emotions, you get afraid. And then your biases, ways that your brain looks at money, which aren't accurate. So you got all these subconscious things driving your behavior, and your number one behavior when things feel painful is to run the other way or to sell. So we had to do just constant webinars and constant outreaches, constant one-on-one training, group training to
Because
stay
people thought it would go
disciplined.
down further.
They thought, well, everything on the news was, if you turn on the news, Fox Business, I was on Fox Business. But if you turn on the news, most people were saying, oh, it's down 50, it can go down another 50. And I was saying, well, look, it's capitalism, it's random, and it could just go up, and which it did. It went up huge for a very, very long time. And if you panicked and got out, you really killed yourself. But advisors were freaked out. I remember advisors in rooms crying, like crying. I'm like, what are you crying about? Like, well, I don't know what to do, and the market crashed, and I sold all my clients, and I put it in cash, and I don't. I'm like, you know what to do. Markets are random. Keep the money in the stocks. It's gonna come. It'll come back. Your
Yeah.
job is to keep people disciplined, not to panic and hurt them.
Yeah. And there's a big run, like you said, from 2011 till really 2025. I mean, a pretty big run. Even 2020 slowed it down a little bit, but 2021 was a big hot market. And even with the Fed increasing rates, early 2022, I tell people all the time, I'm like, man, guys, we've been in a high rate environment for 48 months now, and the stock market has done pretty good, and real estate in general has done pretty good. And if you tell me like 4 years ago that the interest rate environment would double and we wouldn't see this big crash, I would have thought you were crazy.
Well, I think that's a great point. The reality is, even if you had the newspaper headlines of what's going to happen next, you still can't predict the market. So, for example, in World War II, from the time that Japan hit Pearl Harbor to the end of the war, millions and millions of people, and all the infrastructure destroyed in Europe, and all the infrastructure in Japan, and all the terrible, I mean, obviously the worst in modern history, human tragedy, death, suffering, and pain. And you saw all those headlines, and someone would ask you, well, what do you think the market did? You go, it's going to get killed.
No, for sure. 100%.
And it was up an average of 12% a year
Mm.
for 5 years. So even if you know the headlines, you don't know what the market's going to do, because people's emotions and their instincts and the forecast are already factored in today. So it makes there's comfort if you're a smart investor that you don't have to predict the future. But if you think that you're going to get in and out at the right time, and by the way, Rich, if somebody knew on Wall Street, these bullies, they wouldn't tell you.
Mm.
They keep it all for themselves.
Mm. Yeah, no, 100%. I think that, well, I'm curious to hear your thoughts on this, but we just ended 2025. The Fed came out, did 3 consecutive rate cuts. We have a new Fed chair coming in, this guy Warsh, taking over for Jerome Powell in May. What are you anticipating forecast-wise in terms of how many basis points worth of cuts do you think that we'll see the Fed roll out in 2026? What's your prediction?
Well, predictions aren't my deal, but I can tell you is this. Fed does not set interest rates. And that's a big, huge problem. Most people think the Fed controls interest rates. Free markets control interest rates. So the credit markets are extremely liquid. There's trillions of dollars changing hand every day. And interest rates globally are relatively equal, even though different feds at different countries have different policies. So the idea that the Fed actually controls the interest rates, they have maybe like a 2%, effect over 98% of what the effect is. Most of it is just following around the market. And obviously, I hope interest rates go down. I'd like to refinance my house.
Yeah. Yeah, I hear you. I hear you. So, but for the Fed to take the rates from zero, what it was, to, we saw an uptick of 350 something basis points over the course of a couple years. Who really controls that? If you're saying the
Well,
Fed
if you
doesn't control that,
if you follow the more, on which I know you do, the mortgage rates and the bond rates and the debt rates, the debts go up first, and then the Fed follows it up, and then it comes down, and then they're forced to go down. But they're usually following interest rates, not creating it.
yep. I'm curious, like when the rate environment, when it does go down, okay, we don't know when it's going to go down, but let's just say it goes down, between the next 2 years, it goes down a couple hundred basis points. How does that affect your industry?
Well, it doesn't. Remember, I told you the headlines. What if you knew the headlines? You still couldn't predict which way the market's going to go. So I think it's good for obviously, if they come down 200 basis points a ton,
Market will heat up.
if they did come down, that would be great, because that means interest rates have already come down since they're just following it. So anyone that wants to buy a house, buy a car, finance a business, finance a plane,
Yeah.
those interest rates go down,
Yeah.
that's going to be great for everybody. And that'll also help calm people's fears about inflation. And I think that we still are like a inflation hangover from Biden. Everybody's acting like it's 9%, but it's not. It's pretty close to historic rates, around 3%.
Yeah. No, I hear you on that. So you say Americans outsource responsibility for their financial freedom. And when you say that, are we talking about trusting financial advisors, the media, the markets more than themselves?
I think it's the whole thing.
Mm.
I mean, I learned the truth about investing, that the returns came from the market and not from the managers, and that there is academic research. I won't get in the weeds, but it's modern portfolio theory, efficient market theory, the 5-factor model. These things are well established in academia. We apply them to portfolios. And in 1991, when I started the company, I thought, wow, this is great, because there will be a new enlightenment. We can finally stop speculating and gambling and hurting clients. And what happened was the opposite. And for several reasons I couldn't foresee. Number one was so many exotic, crazy things to invest in today. Now we have ETFs. There's 1,400. They're not all the same.
1,400 ETFs?
Yes, 1,400 ETFs.
Damn.
20,000 cryptocurrencies, massive amounts of hedge funds, private capital in real estate, private capital in equity and credit. And so you have all these massive options. And then you have, when I started in 1991, you got your news from a newspaper, or maybe news twice a day in the 6 and then 11. You didn't have 24/7 news channels, and 24/7 channels that are given to you from not just news, but investing channels.
Yeah, and social media too.
So then you got the social media. So now you have this barrage,
Mm-hmm.
and then you have this addictive thing in your pocket. So there's all these exotic, corrosive investments that aren't really investments. They're more like gambling. And then you have this bombarded 24/7 by the media. Then you have basically crack in your pocket where you can speculate and gamble. So it made it way worse. And as a result, this grand revolution, not revolution is not a great word, this grand enlightenment, renaissance, where people would stop gambling and prudently invest, it never happened. It never happened.
Yeah. Interesting. Yeah, there's a lot of options out there. If you really think about it. When I had so my background was, I was an 11-year government employee as an air traffic controller, and I maxed out my 401k every year. And I'm glad that I did, because that was my seed money to go buy those apartment deals in Cincinnati and kind of get in the game. But we had what's called a TSP, a thrift savings plan. And so there would be like 5 options to invest into. One was an index fund that would mimic the S&P 500. Another was an index fund that mimicked the NASDAQ. And those were some of the more aggressive ones. And then they had like fixed income securities that would maybe do like 3 to 4% a year. And then they had a savings one that would maybe is a high yield savings. At the time, it maybe did a 1.5, maybe 2 points on a good year. And so when people got close to retirement, they'd be 5 years away from retirement. They would go into the fixed income that would get you 4%. And then once they got 2, 3 years inside of retirement, they would go into this savings thing, which would be 1.5, 2%, because they didn't want to lose money. And that's all I really knew. Those are the options. But now in today's age, I'm like, damn, you got all these options and all these different things at your disposal. I mean, people are overwhelmed with information today. I mean, even if you listen to this show, it's like I'll bring on a lot of real estate investors, and there's 100 ways to make money investing in real estate. There's 100 ways to make money investing into, stocks, and I bring on options traders and guys that are Bitcoin guys. There's a million ways to do it now. And so it's like, damn, like, how do people get clear on what to go with? And I'm curious for you, what is your advice for those people out there that are maybe a little bit overloaded with information? What do you think is the way that they should go?
Well, the only information you should be seeking out is scientific, empirically tested research. Everything else is pretty much garbage when it comes to investments like crypto and ETFs and stocks. And, we're invested in over 20,000 holdings in over 100 countries, diversified and rebalanced every day. And it takes a lot of academic information, but you got to study up. Otherwise, you're going to be a victim. And the information you want to study is the kind of information coming out of the Nobel Prize winning universities. And there are Nobel Prize winning investment strategies that have won Nobel Prizes. And those are the ones that you want to be looking at: efficient market theory, modern portfolio theory, factor models, things like that. And run away from the big brokerage firms and the mutual fund companies, because they don't care.
Yeah. Yeah. No, 100%. So you say capitalism lifted billions out of poverty. And you talk about why people distrust it today. Break that down.
Well, I think that children are being brainwashed.
What do you mean when you say children are being brainwashed?
So from a very, very young age, kids are being taught socialism and communism. And they don't see, because it's not taught very well. For example, my daughter, she went to the University of Chicago, which I thought, okay, that's great. That's a free market university. They have a lot of Nobel Prize winners. They'll teach her free market stuff. And in her very first class she had, they were teaching the Communist Manifesto in her English class.
That's crazy.
They weren't studying Hemingway.
Yeah.
They were studying Marx and Engels. So they and then teaching it, like, and if you didn't regurgitate it and agree with it, then you were going to get an F in the class. So the idea of supply and demand, the idea of freedom of property, the idea of personal rights, the idea that you can create your own business and your own value. So they're taught that that's evil, and that if you make a lot of money, those people are evil and take advantage of the other people. What they don't see is communism is evil. One of the 10 commandments is thou shalt not steal. And in government, what they do is they set up these huge, governments, collectivism, and they steal the property from the people that created the money. And they just spread it around their crony friends in the government. The poor people never get it. Only the huge politicians get it. There's nobody rich in Russia except oligarchs. Same thing with Cuba. I mean, there is no idea in human reality that has caused more pain, more suffering, more death than the idea of communism. It has literally killed over 100 million people and then put hundreds of millions in eternal poverty that are stuck in these countries that don't have freedom and don't have free markets. So, and the reason that people don't believe in free markets or capitalism is because they've been brainwashed to do other. If you read the Communist Manifesto, it says, number one, get rid of God. You got to get rid of God. You can't. People have to worship the government, not God. The second thing is you got to get rid of property rights. You cannot allow people to own property. You have to confiscate that. You have to make sure that you have a progressive tax rate. So if someone does get, some capital, that you can confiscate
they
that
get punished.
capital
Yeah.
away. And you have to get the kids it has to be public education. Can't let the parents do it. You got to take the kids when they're very, very young, very little, and then indoctrinate them to what communism is.
Why do you think they're teaching our kids this in the public school system?
Because the public school system is the government.
Yeah.
And they're protecting their governmental jobs and their government bureaucracies. Why is it that people can't say that a Leering Center in Minneapolis is bad, that it actually should be a learning system and a center, and over billions and billions of dollars have been stolen up there? But that's just an example. I mean, it's all over the place. We're in California, so how much theft is there here in California? It's governments stealing it from the people that make the money and stealing it from future generations. The government steals so much money that they can't just steal it from us, people that are making the money. They also have to steal it from the future generation, who's going to have to go into massive debt and someday is going to have to pay trillions and trillions and trillions of dollars back.
Yeah. I would say the government has an alignment of interest to breed middle-class people, because you got three things. You got the federal government, you got Wall Street, and you get the central banking system. So what do they tell you from a young age? They say, go to school, get good grades, go to college, get a job, play it safe, diversify, don't take any risks, invest in your 401k, your IRA. They don't teach you how to start a business. They don't teach you real estate investing.
No,
but they teach you how to play it safe. They teach you not to take any risk. And when you go to college and you get educated, you get a high income earning W-2. Well, what happens? If you have a high income earning W-2 job, you pay the highest tax bracket. That's cash flow for the federal government. When they teach you go buy a single family house, that's cash flow for the central banking system. What do they tell you? They say go to college and get student loan debt. That's more cash flow for the central banking system. And when they say play it safe, diversify, invest in Wall Street, and you go give your money to these financial advisors, you're now, that's cash flow for Wall Street, right? You're just talking about Morgan Stanley, Fidelity, all these people that are making fees on everyone's money, regardless if they make you money or not.
Yes.
And so that's why I say the central banking system, Wall Street, and the federal government have an alignment of interest to breed middle-class people, because without the middle-class people, they don't survive. And I also think it's common sense that if you tax, punish those who work and improve, if you tax and punish the Americans who work and improve and give free money to those who don't work and improve, you indirectly incentivize the second behavior.
Absolutely.
It's common sense.
Yeah, Dr. Art Laffer is on our academic board, and he worked with Reagan on engineering the Reagan recovery. And he'll say you can't love jobs and punish job creators. Incentives matter.
Incentives matter, yeah. Alignment of interest matters.
They absolutely matter. And they don't teach entrepreneurship.
No, they don't. I wasn't taught it.
That's why this is great, right?
I had to learn this on my own
to get the mindset.
Yeah.
There was only two classes at college that I got a C in. I got a C in investing, and I got a C in entrepreneurship, because I fought the professors, and I wouldn't go along with what they were teaching. And I got some professor making $50,000 a year trying to tell me what it was going to be like to be an entrepreneur, and then grading my papers. And this was late in my junior year. I became very
the guy's never owned a business.
No, never owned a business, but trying to teach somebody about entrepreneurship. So, and then I fought the investment finance professor. They don't want dissent in school.
They don't want what?
Dissent.
What do you mean when you say that?
Well, they don't want dissent because if you argue with the teachers and disagree with them, you're going to get a bad grade. And, if they say stock picking works and you look at the research and you say, no, it doesn't, it hurts people, and you won't regurgitate that on the test, then you get a bad grade. If you believe in capitalism, the dean of the school, after I had become pretty successful, about 10 years after I graduated, said, can I come and talk to you? I said, sure. And so he says, hey, we're looking for contributions. We're building this new building, and, you could put your name on this, library or whatever. I said, well, let me ask you a question. how many of your professors are socialist versus capitalist? And he said, about 75% of our regular professors are, probably very, very liberal socialists. I said, well, what about your business professors? He said, probably about 50%. And I said, why would I give you money? Why would I give you money? I'm an entrepreneur. I'm a capitalist. Why would I give you money to promote, leftist collectivist ideology in the world? I'm not giving you any money.
Damn, that's crazy. That's a crazy takeaway. Yeah, I mean, I think it is interesting with mainstream media, the public school system. Um, the way that they are, teaching kids these days is different than it was, 50 years ago, 100 years ago. But I'm curious for you, having 8 kids. What are your thoughts on the public school system? Do you allow your kids to go to public school, or do you do private school, or do you homeschool them? What are your thoughts?
Well, I grew up, and my wife grew up both in the public school district, but it's so different now than it was. I mean, it was pretty even-handed when I went to school. Now, though, the public school, I mean, look at what happened in COVID to all the public schools. My 2 children that are in school age right now are in a private school. I'm not opposed to homeschooling. My wife and I have talked about that. May even happen in the future. But during COVID, that's when I moved the kids out of the public school into private school. And they wouldn't let them come to school. So they had to sit in their room on Zoom for 8 hours, 6, 7 hours, 8 hours a day. And they made them wear a mask
On the Zoom call?
on the Zoom call to prepare them for when they came back to school, to get used to wearing a mask. And my oldest son, he figured out how to do this graph where he took a picture of himself and he had fashioned it to the seat. So he was over in the corner hanging out playing games, and he had his little
Oh my
a
gosh.
picture of himself on this. But it's just terrible. I mean, what they did to kids, and they held them back years, and they weren't teaching them, and the teachers didn't care. At least the ones that were teaching my kids didn't care. And they were,
Dude, it was crazy to think this is only, 5 years ago. But I
yeah,
think about, they didn't allow you to go to concerts. They didn't allow you to go to sporting events. I'm a season ticket holder
yeah,
for the San Diego Padres. And I remember that year it was like segregation inside the ballpark when they first opened back up. You had a vaccinated section and you had a non-vaccinated section. And I remember when the season kicked off, as a season ticket holder, they told us that, like, because we weren't vaccinated, we had to go sit in the outfield. I'm like, damn, it's crazy. I think this is only like 4 years ago. Great,
in
insane,
the
and
outfield.
craziest things were going on.
Oh, it was insane. You could go to a bar and get drunk, but my wife and I work out at a gym close to our house, but they wouldn't let you. You can go to a bar and get drunk because that was essential, but you couldn't go to the gym and work out because that was dangerous. And with my business, since we're in the finance business, it was deemed essential. But I wasn't going to shut down anyway. I mean, and I didn't even make our employees wear masks. I said, if you want to wear a mask, wear a mask. That'll protect you from the other people. But I'm not going to force anybody to wear a mask.
Yeah. What would you say to the individual listening to this right now that hasn't figured out their direction yet, and they want to, start a business, or they want to get into entrepreneurship, but they haven't exactly figured out their path? What would your advice be to that person?
First of all, be grateful that you're in this country. Because if you were in Cuba right now, you wouldn't be able to even have this conversation about what you want your life to be like and how you could start a business. It has never been better time to start a business. Back, when you bought your first real estate, you probably had to borrow a lot of money for you back in the day. I had to borrow money to get my business started. You can literally start businesses now for almost no debt at all. So creativity, hard work, innovation. The only thing that scares me for young kids starting up today now is AI, and it's going to be taking over so much stuff. Eventually, you're going to have to figure out what human beings can do that AI can't do. So, for example, I think it's going to be a long time before AI coaches a team to win the Super Bowl or coaches an Olympic athlete. I think there will always be a place for human beings. It's kind of like you can go watch a movie and you know that a lot of that CGI, even in the past, was CGI. If you go to watch an Avengers movie or something like that, but that doesn't stop people from going to Broadway. That personal, live experience of going to watch Hamilton and the raw emotion and the amazing performances and you just can't duplicate that on a screen, right? So I think that what's going to happen if you're young and you want to open a business, you should be wondering, how can I use technology? But how can I add to that and create something as part of my offering that can only be created and fulfilled through a human being? Because if it can be replaced by technology, it's going to be.
Mm-hmm.
We just made a music video.
Did you?
Yeah.
Okay.
Yeah.
I didn't know you're in the music industry
Yeah.
now.
Well, we're not really, but one of our advisors took the book and they used AI and they made a country song out of it. And then I went to my department, my production department. I said, hey, can you take this AI song and then turn it into a video? And it took them about 3 or 4 weeks, but it would have been probably $2 million if we had gone out traditionally with filming and everything to do it. But the whole video, the whole thing, it's on my Instagram. The whole thing is AI, and you cannot tell.
Damn.
You cannot tell.
Damn. That's
Yeah.
That's good. That's good.
It's crazy.
Yep. I would say, like, for the folks listening to this right now that are looking for that thing, as you mentioned, it's not only the best time to get started, but the ability to go out and promote and market yourself has never been easier. 4.8 billion people use social media today. It's free to post. We have over 500 million podcast listeners worldwide. You can go and promote yourself today. And then, I think about AI and technology and all this stuff to our advantage and our disposal. The access to information has never been easier. YouTube, podcasts like this, online, social media, you can learn a lot of stuff for free, but also the ability to get in the right rooms, like mastermind groups. There was no such thing as mastermind groups or social media or YouTube, 20, 30 years ago. And so the access to information has never been easier. And like you said, you can start a business for very, very low money. Today, you can buy businesses for seller financing, very low, no money down. And so it's really the only thing stopping you is you at this point.
If you're willing to hustle,
yeah.
And I kind of joke about this in the book, but I am really serious, which is if you had to work for free. Now, that sounds insane, but every entrepreneur I know is looking for good talent. They're constantly, no matter what job you take in my company, we have 80 employees. No matter what job you take, I'm constantly watching. If you're winning and you're crushing it and you're working hard, you're going to get a better job. You're going to get more opportunity. You're going to get more training. So I'm always looking for who's really willing to pull together for the team versus being selfishly in the company just for themselves. And one of the things I found that really kills businesses faster than anything else is jealousy and resentment. People in businesses get jealous and resentful of other people in the business instead of just trying to grow and be part of the team. And that usually causes a lot of gossip and negativity and the bad apple effect. And if you're a hard worker, you can literally go to any entrepreneur, get a job, keep working hard, and work your way all the way up to the top of that company.
If you have the right mindset, the right attitude, and you're willing to bet on yourself and get in the right rooms. But your last point about resentment and jealousy, that's why my team is mostly female. Because I find that, like, women, generally speaking, just as very general, tend to be more loyal. They tend to be a little bit less sensitive to constructive criticism, and they'll go to bat for you.
Yeah, you get a couple alpha males duking it out every day.
Yeah. Mark, this has been amazing, dude. Where can the folks get in touch with you if they want to learn more about your book, everything that you're doing, and you got a 50% offer for the listeners today? Where can they get in touch with all that?
Yeah, so you can get the book. It's called Experiencing the American Dream. It's all over the place, Amazon and all that other good stuff. It's also on Audible, which was the worst 3 weeks of my life.
Damn, it took you 3 weeks to get through.
Oh, man. It was 40 hours of just like hammering through It cuts down to 11, but it took me a lot of time to audio it. But no, it's available in audio. You can check out our website, matsonmoney.com. You can register for one of our 2-day workshops. We have, I think our next one is in July.
Okay. Okay. July at the workshop. And then you get a code here for the audience, Rich50 for 50% off to go to one of your workshops. What are they going to get at the workshop?
They're going to get education. They're going to learn about academic investing. They're going to have a time for their whole family to get together, determine what your money is actually for, understanding how your brain is hardwired against you, understand how investing really works and how to build portfolios to fulfill your American dream, to get your family on the same track. It's a great 2-day active. It's not just a lecture. You do a lot of different exercises and work through a lot of things as a family. It's a lot of fun.
I love it. I love it. There it is. He is Mark Matson. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you on the next one. Peace.